In this video, I will discuss the Q4 FY25 result and Concall of Anand Rathi Wealth. So, Anand Rathi Wealth is a wealth management company. Mainly, the company manages the wealth of the high net worth individuals. Um, we can see, if we see that 77% of their AUM comes from the portfolios with a asset of more than 5 crore. So mainly their AUM is driven by the HNIs, as well as 70% is upward 5 crore portfolio value, and 24% AUM comes from the portfolio is with a value of 5 crore, more than 5 crore. So yeah, and it helps Anand Rathi to maintain their performance throughout the phases of stock market, because as the high net worth individuals come with a company for their wealth management, they are more like investors. They are more like a long-term investor, not like those pupils with small amount trading in their demats and all. So that is a main thing with Anand Rathi, made moat with Anand Rathi, that the clients are very high net worth. So there is a consistency with their contribution with AUM. And if we see the client vintage also their client vintage is like 60% clients are more than 3 years vintage. So we can see, and if you see after COVID, there is more families, more individuals, more high net worth individuals coming in the stock market. So 60% over 3 years is a good number. And if we see also the client attrition, that is just 0.52%. As I said, that there is a consistency with the contribution when high net worth individual comes to the game. So that is a really good moat of Anand Rathi. And I will discuss the PAT, the AUM performance in the next part. So now let's talk about the result of Q4 FY25. And the AUM, if we see, as the market was sluggish in the Q4, that is why their AUM growth have slowed down a little bit. Like they were growing their AUM by around 40% in last few quarters, but this time this is around 30%. So yeah, it is a market link thing. The AUM, if you see the whole industry, whole capital market industry, the same thing will be noticed. But what is plus point of Anand Rathi, that the company have high net worth individuals. So if you see other capital market companies, their growth have slowed down more. But Anand Rathi is like 40% growth engine coming to 30%. So that is the plus point of Anand Rathi. And it is completely market driven. If the market rebound again in Q1, Q2, Q3, you can see again the AUM is growing. So that is the thing with AUM. If I talk about the revenue also, as the AUM is AUM growth is slowing down, the revenue have to slow down, because see, when your AUM is growing by 40%, as you are a mutual fund distributor, you are a special, a structured product like thing, then when the AUM comes down, then also the also the percentage of your revenue comes down, because what the distributor take home, the percentage of AUM. So when the AUM is coming down, like the start of December, start of January, if the AUM was like 100 crore, then it is now 70 crore like. So that is the point with the moderation in the revenue growth. So that is also a market driven thing. So if we talk about the guidance of revenue, they are guiding us for 1175 crore for FY26. So if we see, that is 20% year on year growth, and now the revenue is growing around 20%. And yeah, Anand Rathi always gives the guidance conservatively. We saw last year also, they had guided us for less, then in the half yearly mark they increased the guidance and they achieved the guidance in the later part of the year. So that is the point, but we have to go through the guidance for now, because we do not know that if they will increase the guidance again or not. We have to stay in the present. So the revenue guidance is for 20%, 25% growth for the year of FY26. So that is the revenue. And if we see the active client base, to me it is the most important parameter in this business. Every business like NBFC, if we talk about the NBFC, there is a certain parameter which is the most important, like for NBFC, for the lenders, the GNPA number, the NNPA number, the credit cost, that is the most important thing. Because if the GNPA number, credit cost is in the hands, in control, then if the management is trying to increase their disbursement, trying to increase their AUM growth, they can. But if the GNPA number is going up, if the credit cost number is going up, no management can increase their AUM rapidly. So what is the main thing? Main thing is the GNPA and credit cost have to be in control to increase their AUM growth. If the management wants, if the management does not want, that is another point. But if management want, they can, because the GNPA number and credit cost is in the control. So in the Anand Rathi also, if we see, if the active client base is growing at a consistent pace, then that is the most important thing. Because if the clients are staying with Anand Rathi, clients are moving to Anand Rathi, the AUM will grow when the market recovers. AUM will grow around 40%. I do not know anything, but yeah, I am assuming that the 30% growth will be 40% if the market rebounds. And when it will happen, when the customer base is growing. If the customer base is growing, more capital will come into Anand Rathi. The vintage customer will again deploy their money to Anand Rathi. So that is the point. That is the point of active client number. And if we see the number, they are growing it consistently around 15 to 20% for last few quarters. So that is also for this quarter. It is I think 18%. So that is one of the most important thing, that you have to grow your client base, because the AUM will come. It is a byproduct. AUM is the byproduct of client addition. So that is the point with active client number. if we see the RMs, that is also growing about 15 to 20%, and they are guiding us for 50 to 60 RMs addition in FY26. Now the RM number is 380, and they are guiding us for 50 to 60 RMs in FY26. And the RM base is also growing about 15 to 20% year on year. So it is the RM. And if we talk about the client per RM, that is now around 31%, 31 client per RMs. And they are talking about that one RM can manage 50 client at a time. Okay, so there is a very big gap what the machinery and the plant, I mean, RMs are like machinery and plants. So what the what the capacity is and what the utilization is, and they are saying that 380 RMs can manage 6,000 more clients. So it is 50%. It is around 50% in utilization. Okay, so I mean 50% increase. So that is a very big thing. The operating lever in the point of view of operating lever is also, that is very big thing, that there is a gap of, I mean, 19 clients that can be managed by a RM. And if we see the utilization, that is also like what? That is also like 60% utilization for now, and that is also a good thing, that they can manage more. They can manage more. So that is the thing we have to see, that how it rolls out in the future, that how the client per RM, because that will bring the operating level, extra operating level in the business. And if we talk about the PAT is growing around 20%. I mean, for this quarter it is growing about 30%. And if we see Anand Rathi shared a presentation, and they are saying that from their IPO they have grown their PAT 20%, minimum 20% every quarter. The lowest I can remember is 23, and highest is around 40%. And if we see maximum quarter is about 30%, maybe two quarters is less than 30%. Like one is 23 and one is this quarter 29.7%. It is like 30% also. And as I remember, if I am not wrong, they IPO'd in mid 22. So that is a very big number of very big sample, moderate kind of sample size. And if we see just 6 companies in Nifty 1000 have achieved this thing, that every quarter they have shown 20% of PAT growth. So that is a absolutely wonderful consistency, that they are going their PAT above 20%. And as I say, the only 2 quarters they have done less than 30. One is this, and one was 1-2 years ago 23%. So that is a big thing. And what market wants? Consistency. And if we see capital market, the whole capital market is a cyclical thing. Most of the companies are cyclical. As the market down cycle comes, as the bear market comes, the capital market starts showing the bad result. But Anand Rathi is completely different. They are consistently performing irrespective of market condition. So that is what the market wants also. And we all the investor wants what? Wants the predictability in a business. If our business is predictable, then more money flows into the business. Yeah, it is absolutely right that you have to show minimum kind of growth. That is another point. But growth plus predictable, that is wonderful. If we see the growth, that is a 30% engine. If we talk about the PAT, so that is also very good. 30% and predictable, nothing like it. So if we talk about the ROE number is now around, if I am not wrong, 44.6% for this year, increased by 503 BPS year on year. So ROE number is very good because it is a asset light business. You do not have to buy assets for it. The main asset is the RMs. That is the that is what? That is only the cost. The what? Anything. So I do not recall the word. So that is the thing. And if we talk about the operating leverage, the management is saying that there is not too much operating leverage in few quarters because they are working on some efficiencies like technology. They said that they did not invest much in technologies, but yeah, they are investing in that, and they are saying that, see, when they are guiding us for 10, 15, 20 years of growth around 20 to 25%, and that long term growth cannot be achieved by a short term operating leverage. So that is the main thing, that if you have to grow for a long time, you have to you have to expense in some, you have to invest in some category of business. In Anand is saying about technology, and some business may talk about another thing like talent search and for that. And so that is the main thing, and they are talking about there is not much operating leverage in next few years to come. Yeah, if you see, there is operating leverage for now. The revenue is growing by 20%, the PAT is growing by 30%, but the gap may not increase. That is, they are saying. But yeah, if they are planning to grow, if they are saying that they will grow 20 to 25% for years, like 10 years, 15 years, 20 years, that is the requirement. That is, we have to give it to the company, that they have to invest in something to grow for a long time. Because if you do not upgrade yourself, by the time, by the era, you have to lose. So that is the thing with operating leverage. And I think, see, Anand Rathi is a consistent performer, so nothing much wrong with that company. They are growing their AUM, revenue, PAT, and if we see the client attrition also, that is very low for this quarter. This is 0.1%. So this is nothing. This is absolutely nothing. So yeah, it is a good business, absolutely going well. We have to track the business, where the business is going. That is all. If we talk about the valuation is fairly valued. there is nothing much upside, but yeah, it is a business showing immense consistency in last few years, and we have to track that how the consistency turns out in the future. If they can show this kind of consistency in the future also, and if they show, that is very good. So that's it for the video.